Markets are pretty terrifying at the current time, but what if I told you there was a secret way to decode the markets? I'm only going to take you through the VIX, the S&P 500 and Bitcoin from the cheat sheet, which is available free from CTKSmethod.org. I'm going to prove to you unequivocally, if you just look at these three things right now and you understand, most importantly, the structure of what is going on, and I'll use structure on Bitcoin, you can use it to change your financial future for the better. Let's run the numbers. In markets like this, it's wildly important to understand what you're actually looking at. You can follow the news and get terrified with words like recession, depression, stagflation, all of that. But the truth is, you'll be able to tell what the news will be because you can just look at the charts. And through intercorrelation and interconnection, you'll understand things that financial journalists understand. You can be ahead of the news. Here we're just looking at NVIDIA. This is an overlay of Bitcoin. You can see how Bitcoin indicates risk-on and risk-off activity across the major markets. Now, let's turn to the VIX. Many investors and traders believe that all price action is highly random. It just doesn't follow any particular pattern and it's all manipulated. This is actually not the case. When we look at the VIX, which is the fear index of the S&P 500, and I invert Bitcoin's price, which measures risk-on or risk-off activity, you can see pretty clearly they're following each other. This is called intercorrelation. And it's not just the VIX that does this. Inside the cheat sheet, which is available free from CTKSmethod.org, we track the VIX, the DXY, dollar yen, 10-year, 2-year oil. That's row 1. Now, why do we do this? Because we need to tell the weather of financial markets. And it's been really stormy of late. Now, why do we bother if we were just trading Bitcoin or Tesla or Apple or NVIDIA or Strategy or whatever we were trading, Solana or Doge or XRP, or gold or silver? Why wouldn't we just look at gold or silver or the thing we put our money into? In the profiting course, I call that our money chart. The reason we don't look at that first, we look at it last. We look at the cheat sheet first, and we look at how intercorrelation and interconnection are driving the weather of change inside financial markets. Why is that important? Because when you look at the VIX in the past trading session, what did we see with the VIX? It shot up, which caused Bitcoin and the entire stock market to fall down, and then it retraced, causing a little bit of a rally. Sometimes it's really hard to understand inverted charts, so I'll just do it like this. But if I put this chart and this chart, you may not see the intercorrelation and interconnection. So what did we see? Basically, the VIX came down in the session before last, and that caused a huge rally in the stock market that everybody was so happy about. And then that rally literally retraced. Ouch. Why? Because the VIX went up. Oh, Ken, it's because of the news. No, it's not. It's because of the VIX. The reason that people get so scared inside financial markets, they just think price action is random. And that's not entirely their fault. If you think about it, the whole entire finance industry subscribes to the concept of the random walk model for pricing, which is price goes up and down and just randomly walks all over the place. Having done a finance degree, I can tell you that is unequivocally not the case. For example, when we look at VIX and Bitcoin, we can see the inverted Bitcoin overlays just the normal VIX. But what about Bitcoin and the S&P 500? Remember, the VIX and the inversion of Bitcoin were just following each other incredibly well. What about Bitcoin and the S&P 500? What's the intercorrelation there? One of the things that people get into, they say, oh, I don't want to look at crypto because, that trades 24 hours a day, 7 days a week, and the government told me it was bad. Oh, now the government tells me it is good, and all the big multi-billion-dollar hedge funds and the banks are getting into it. I guess it's safe now. I'm so confused. I don't know what to do with this crypto stuff. Well, look at it this way. From a intercorrelation and interconnection perspective, Bitcoin is a risk-on or risk-off indicator. Now, we'll look at overlaying Bitcoin on the S&P 500. What do you expect to see? Let's have a look. Looking at the overlay of Bitcoin, just normal Bitcoin on the S&P 500, what do you notice? They're following each other. Now, what's the difference here? Bitcoin trades 24/7 by 365. The S&P 500, yeah, well, stock markets are pretty damn lazy. So what does it mean? If they're following, what happens to Bitcoin will happen to the stock market because it is a risk-on and risk-off indicator. Now, what does this mean for you? If you look at crypto, it can give you a signal as to what is happening inside the main markets because it actually measures the VIX. Now, if this is the case, the inverted S&P 500 or the inverted SPX should follow the normal VIX, and that's that white line. You can see it doing it perfectly. But what about if I just uninvert the SPX? It looks like this. It's a lot harder to see a directional correlation unless you invert and match the price. Price is always moving in a wave. It's always going up and down. Now it goes up and down between structural levels, and the momentum of that up and down wave depends on row 1 and row 2. What about if we drop down to a 5-minute basis with the overlay of the SPX versus the VIX? You can see it throws an incredible signal, but of course that signal is an inverted signal. So if the VIX is going up, expect Bitcoin, crypto, the stock market, stocks to come down. And we can see that very clearly. Now, why is this important? If you're like most people, you'll be keeping a very close eye on the news and saying, oh, what is this news going to do to price? In fact, the thing that you learn and the thing that I've learned after nearly 4 decades inside financial markets, it's the chart price which moves the news, not literally the other way around. Now, why is this the case? Because smart money always profits first. You can see that we've just looked at the VIX, the S&P 500 and Bitcoin, but there are a lot of other charts here as well on the free cheat sheet, which is available from CTKSmethod.org. A lot of people work extremely hard for the money that they put into their investments and also their trades. But unfortunately, they don't learn how the market works. They don't know about intercorrelation and interconnection, and the thing they don't know most about is unfortunately structure. Structure is critical to understand. Here we're looking at Bitcoin, and I'm going to throw the structure on here. Now, what does this mean to you? We can see in the last trading session, the structure was at 81,866. It obviously failed, pushed through a negative CTKS gap, did a structural overshoot, and required several levels of structure to capture price. These particular lines are called Stampfield levels or SLs. They're also called CTKS levels. Now, what we can see here, they are structure, and this structure is drawn through 2 levels of standard certification, which you can learn for yourself, but I'll just interpret it for you. So we lost the 81,866 structural level. Now, it was pretty much a resistance level because you can see all the price failed to get above it, it was failing. What was the impact of this? The sellers were gaining control. At this particular point here, we had negative structural attraction and a likely overshoot to the 79,501 level. So what it meant with this negative CTKS gap, which meant that we had a gap in price. So that also meant increased volatility. And we knew the VIX was spiking up. When I look at Bitcoin like this, I see the VIX spiking up, I see the S&P 500 coming down, I see the NASDAQ come down, the Dow come down, Russell come down, Apple, Tesla, Microsoft, Nvidia, everything, strategy, all of them are coming down because what Bitcoin actually does, it is a real-time measure of the VIX. but the VIX is always structurally constrained. That's why you must know the structural levels. To understand intercorrelation and interconnection is just the first step. Structure is the most important. Another thing to note, just because everything is going on sale does not mean we escape running with terror from the market. We know that the structure will hold price action, and therefore we can buy and sell with a degree of confidence. All I've done here is to focus on the VIX, the S&P 500 and Bitcoin, just 3 of the 32 charts inside the cheat sheet. All of these cheat sheet charts have structure. That structure, just like I showed you on Bitcoin, is also available from CTKSmethod.org. Now, the thing that you want to just bear in mind when you're looking at a particular thing such as the VIX is really, really important at the current time. If the VIX starts to come down, if we see this kind of action, you know already the VIX coming down will rally the S&P 500, it will rally Bitcoin, Apple will rally Tesla, Microsoft, Nvidia, Strategy, the Russell, the Dow, the Nasdaq. They're all going to rally. And if Bitcoin rallies, guess what's happening to Ethereum, to Litecoin, to Bitcoin Cash, Ethereum Classic, BNB, XRP, Doge, Solana, and ADA. You got it. This is what occurs. But we should also look at the Forex pairs and also the yields, the government yields, as well as commodities. And we look at all of these things as an integrated whole. Understanding intercorrelation and interconnection is incredibly important. By doing so, and especially structure, you can avoid stop buying and selling at the wrong times, because you will know how things are moving together, if they're strengthening or if they're weakening. And of course, the strength or the weakness depends always on structure. I'm going to be offering a partial scholarship to the Profiting course. The Profiting course is absolutely invaluable. It is literally the culmination of 40 years inside financial markets. It is a phenomenal thing. And you can see right here in week 2, remember how we were looking through the cheat sheet? We just looked at the VIX and we looked at Bitcoin and also the S&P 500. Here inside week 2, you can literally do deep dives in predicting the tops and the bottoms right across all of the cheat sheet components. Inside week 3, you'll literally look over my shoulder as I do trades in deeply negative market environments, because this is why I created the Profiting course, so that you could profit in any market condition. There's one thing to make money, another thing to keep it, and there's a thing called the hidden RTP trap. RTP is retail trade perfection. It is a wildly dangerous and destructive thing that you must move out of. And also, I talk a lot inside week 1 about RTP. RTP is the death and literally causes people to blow their accounts up time and time again, because there's so many people who are just there saying, oh, I bought the bottom and I sold the top and I do it all the time. Nobody can do that. And the great news is you don't have to. So all you need to do is to reach out to me at LinkedIn and express your interest in the Profiting course. It is literally a masterclass in and of itself. And if you go to the homepage of ctksmethod.org and then just scroll down, you'll come to this area, the CTKS Method cheat sheet. We've been talking about the VIX, the S&P 500 and Bitcoin, and I just showed you a little bit about Nvidia. So Bitcoin and Nvidia, can you imagine how powerful you will be when you understand all of these 32 intercorrelations, interrelationships, and most importantly, structure? It is literally a way to make money in any market condition. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.